Hi, everyone. I am here to talk to you about what's going on with Fed Chair Powell raising the rate again. What's actually happening? Well, as you can see with this little cartoon found on Google, raise the rates, punish the big spenders, don't let inflation get started. That is one of the things he's thinking about, because I'm going to show you in a little bit what's happening as far as inflation rate is concerned. And of course, the other one is be gentle. Think of Wall Street. Think of your job. So he has a lot to contend with. Am I right? So this is what's happening. Right now, inflation rate is about 3.18% compared to 2.97 last month. And guess what? It was 8.52 last year. That is what he's been doing, increasing the rate, right, in order to slow down the economy and decrease the inflation. Well, since 2012, guess what? Their target is 2%. We're not there yet. So will he go out and increase the rate? Because that's what it sounds like when he spoke today. Or is he going to consider, hey, maybe I need to slow this down? But look at the chart. As of July last year was 8.52. July now it's 3.18. Okay. The lowest was in June for 2.97. Okay. So if you were in his shoes, what would you do if you have to maintain a 2% inflation rate in order to maintain our stability? The other thing to look at, as I'm sure you know, is that our credit rating was AAA, and that has fallen from AAA to AA. We're still in good standing. However, that's like having an 800 credit score and then going down to a 740. So that's what's happening also with the economy. Now, what's FRED? Well, FRED is the Federal Reserve Economic Data. And so if you can see here, like people are like, hey, 1980s interest rates were 17 and a half, 18, 19%. What are you guys crying about? It's only, well, now it's over 7% right now. But at the end of the day, what's happening? Well, we have been accustomed for many years to having the interest rate in a low standing. And as you know, we were doing some things to keep it low. Well, now that inflation is out of control, the Fed has to say, hey, Powell's saying, well, I think I may have to increase the rate again. So let's talk about California and how the median home price has been. So people talk about being overpriced. People talk about affordability. So in July 2022 versus July 2023, the median home price was $830,000. This year is it's $832,000. So people were saying, hey, rates are going up and home prices are going to go down. Well, I recall doing a video where the median home price in San Diego, California was almost $1 million. So we are seeing a difference in the market trend itself. So when you take a look at that, you look at the San Francisco area is 1.258, and now it's 1.255. So median home price means what? You take 100 homes, you get all the prices, and you divide it by 100. That's a median, right? But in order to really find out what your particular area is, you can give me a call at 619-846-2675. I'll explain that to you. I also know that most of you are on my little software that you get an email every 30 days letting you know how your home equity is growing and your choices should you decide to sell and or refinance. With that being said, you guys have a wonderful weekend, and I will chat with you later.